I'm feeling low.
Hey everyone, so now we're going to talk about some key strategies that you can use and implement in your portfolio to start generating some real good profits. Now the first one is short-term trades. Now I associate short-term trades as being real quick, in and out, no more than a day. And I'm going to summarize some stuff at the very end for you to really take away. But what I want to do is just show you some key examples, because I think it's really good to have something clear that you can see my thinking, and some of the strategies that I'm using for short-term trades. So one of the ones that I've been trading, I've traded this a couple of times now, is library credits. Now, for me, I mean, I don't know a hell of a lot about it. I've been on and looked at the website and bits and pieces, sort of get the gist of it. But what's interesting for me was that the patterns. Now, the patterns are really key in terms of the candlesticks and everything. I mean, they're such good indicators, and again, if you get a chance to go on any candlestick courses, please do it. It'll up your game 1000%. So what I do is I go onto Bitrix and I start having a look at where the resistance points are. So, you know, some people may argue that they're not there or whatever, but this is what I do. So I'll find where I can see some common resistance patterns. If we go further back, they exist, and again through the bottom they exist, and all of a sudden you can see that a channel has appeared. It goes down and it goes up, and it goes down and it goes up. So I'm about here. I start looking at library credits. I see the trade go up. I see it come back down again. I already know that there's another resistance point here, and then we've got another one here. So I set my trade here. What happens is it triggers the trade. It does go down, but only for a very, very short period of time, and then it bounces back up. And it goes all the way back up. I know that the resistance is here, so I've set a sell at 950, and then I jump out the trade. Real simple. I didn't hit the bottom, and I didn't hit the top. That's not the aim of the game. The aim of the game is to take a slice of the pie. Now, your slice of the pie could be 90% if you've had a really good day, or it could be 20% or 10%. And if you're really unlucky, you get minus pi. You owe pi, if that makes sense. So that was a really good trade for me. Only about £100. It wasn't a big one. When I'm doing day trading, I don't generally day trade more than £400 a time. I keep them quite small. I could go larger, but I tend to put my bigger money into more long-term prospects. But that just gives you an idea of some of the things you should look for. And again, you know, library credits is coming all the way down. What potentially could you do is you look across the line. We know that that is a trigger point. It's trading within this channel. Now, you could set a trade here, and if it comes down and triggers, and it repeats the pattern, goes up, then you could make some nice money. If it comes all the way down and breaks through, you want to get out the trade because it's breaking the pattern. And those are really, really important things to look at. A lot of people jump in because their mate Dave says it's going up and bits and pieces. And sometimes that works and things will go up. But generally, there needs to be a little bit of technical analysis behind it to really sort of give you a better view of what's happening. Another one that I've got here at the moment is Stratis. So I wasn't really looking at Stratis because there hasn't been much action with it, if I'm honest. But someone brought it to my attention. I thought, you know what, I could do a bit more research, did some research. Actually, it's a pretty good coin, but the sentiment doesn't seem to be there. But when I started looking at the patterns, I started to see the channel. And for me, the channel is the lights go on, it's time to make some money. And again, could see it came all the way down, went all the way up. If we look further back historically, we can see that these are the trigger points. So obviously, I've set a trade here, and then I've set the trade here. Now, on this particular occasion, I seem to have hit the trade right at the top. I've got it not quite at the bottom, but I've maximised the trade in terms of coming out at the top here. Doesn't always happen, trust me. But again, if that started to tick out, I would probably have come out at this point here. because again we can see that that line there would be my next point of that I would look to come out if it started on the downtrend. But here it hit perfectly, come all the way down. Now I can see that, you know, there's a bit of consolidation. The bulls and the bears aren't sure who wants to take control at this moment in time. So again, I'm out of Stratis at the moment. I've got a little bit of profit sitting in Stratis, which is, so sometimes your short-term trades can turn into what I call medium trades, where you short-term trade, say £500, and you make £200, but you take your original £500 out, but you leave the £200 in, so you have some free stock rolling. And if you do that 4 or 5 times, you then have a quite sizable portfolio in something like Stratis, and it's absolutely free. There's no risk attached to it then. And that's where, you know, some of your strategies could change potentially midway through. For me, I bought it as a short-term trade, and then I thought, you know what, I'm gonna keep a little bit of this. So again, you just need to decide what you're going to do and how you're going to trade. But looking for these types of patterns will really help you when you're looking to day trade. Now, just some things to really, you know, look out for is look out for the patterns. The patterns are number one. They will help you get in and out within the day, unless you change your strategy and there's something fundamentally that makes you want to change your strategy. Also, cut your losses. Don't get emotionally attached to any coin ever. It is just, this is trading, this is money. You know, you don't want to hold on to it. You think, oh, it's gonna reinvent the world and help everyone and all this type of thing. You know, at the end of the day, it could never come back up. So cut your losses. I look at between 5 and 10%, just because the market's so volatile that you need to give it a little bit of room to breathe. But I'll jump out. You know, 20% on a trade is more than reasonable. Number one thing where people don't make money on day trading is greed. People get greedy. They see, you know, some coins got 100% and they stay in the coin waiting for 100%, and then the next day it's down by 50%. So they're now down on their trade like 100, 200, 300 pounds, and then they're waiting for it to come back, and then everybody's just jumping out to get into the next coin and day trade the next coin, and then it's down even more, and then you're left sitting on a massive loss. So, you know, don't be greedy. 20%, 30%, more than reasonable. You're never going to call the bottoms, you're never going to call the tops. So, and also look out for announcement and what I like to call pumps and dumps, where people pushing it hard on social media. You know, a couple of things recently I've been quite lucky to get on the back of is Bitcoin Cash, ZCL. You know, there's a couple that have just done well for me, but they were more medium term trades, and that's what the next section is going to be all about.
If you liked today's video, please leave a like or a comment. You can follow us on Twitter, Instagram, or check out the new ICO Discount Club website, where you can check out all the new ICOs, great discounts, and also prize giveaways. As always, I hope you got great value out of today's video, and I'll catch you on the next one soon.
I'm feeling